Welcome back. Today we are talking about LLCs for real estate. I want to answer the questions that you are actually wondering. Does LLC save you taxes? When does it actually matter? And when is it just extra cost and complexity? Because I promise you, this one decision alone can either keep your structure clean and scalable or create a mess that's hard to unwind later. So let's start with the biggest misconception. LLC does not save your taxes by default. And here is why. A single member LLC is what we call a disregarded entity. That just means the IRS ignores it. So whether your rental is in your personal name or in a single member LLC, you are filing exactly the same Schedule E, same income, same deduction, same tax result. So if nothing else changes, your taxes don't change. Now, here is where this gets more interesting and more useful. LLC becomes valuable not because of what it does on day one, but because of what it allows you to do next. It gives you flexibility. Let me explain. If you stay in your personal name and later want to bring in a partner, now you have to restructure ownership, possibly trigger legal and tax complications. If the property is already an LLC, you can simply add a partner by issuing a percentage of that LLC. Very clean, very simple, and way more scalable. Now, let's talk about multi-member LLC, because this is where things actually start to change. The moment you add a second owner, your LLC becomes a partnership for tax purposes. Now you are filing a partnership return. And now we can start allocating income, expenses, and depreciation between partners strategically. That's where planning opportunities begin. Not automatic savings, but options that did not exist before. Now let's compare this to something people often ask me. Should I put my rental property in S corporation? And short answer, in most cases, no. And here is the reason. Rental income is generally not subject to self-employment tax anyway. So the main benefit of an S corporation, saving on self-employment tax, doesn't really apply here. And now you are added payroll requirements, extra filings, more complexity without a real benefit. So in the real estate world, LLC taxed as partnership or disregarded entity is usually the cleanest and most flexible route. Now let's talk about liability, but in a real world way. Yes, LLC is there to help protect your personal assets. But here is what actually makes the protection hold up. Clean separation, separate bank accounts, no mixing personal and property expenses, clear documentation, because if you treat your LLC like it doesn't exist, the court can too. And here is something people don't think about. If you own multiple properties, putting everything into one LLC can actually increase your risk, because now one issue can affect everything inside that entity. If you have issue with a single real estate building property, if you have several properties in the same LLC, it will affect all other LLCs as well. So sometimes we look at separating properties into different LLC, not for taxes, but for risk management. Again, this is where strategy comes in. Let me give you a really simple way to think about this. LLC don't create tax savings. They create structure. And the right structure gives you the ability to implement tax strategies correctly as you grow. So if you are early on, one property, maybe two, don't overcomplicate it. If you're scaling, bringing in partners, building a portfolio, now structure become crucial. And just to be clear, when I say don't overcomplicate it early on, I'm not saying don't use an LLC. Even with a single property, it often still makes sense to hold it in LLC for liability protection. What I mean is you may not need a whole complicated structure with multiple entities right away, because the goal here is not just to have an LLC, but it's to build something that actually supports your growth and doesn't create problems later. And that's all for now. If you found it helpful, please share it with a fellow real estate investor so they can benefit as well. And bye for now.